Welcome to episode number 33 of Colorado TechCast. Hey everybody, Trapper here. Thanks for joining me on this episode of Colorado TechCast. Colorado TechCast is a weekly podcast where I interview CEOs and founders of Colorado-based technology startups. Join me each episode as I explore the Colorado technology community from the inside out.
Krista Morgan is co-founder and CEO of P2Binvestor, our marketplace lender that helps entrepreneurs and innovators transform their companies from sector newcomers to industry leaders. P2Bi partners with banks and investors, while also offering a robust crowdfunding platform to provide affordable, flexible capital that evolves with business growth. Krista has quickly grown P2Bi into a multimillion-dollar company, a thriving online marketplace, and one of the few tech-enabled commercial lenders that can underwrite and fund million-dollar lines of credit in just a few days. In addition, Krista is a sponsor and co-host of the popular podcast, Women Who Start Up Radio, a networking and learning platform for female entrepreneurs and innovators globally. With a BA in economics and political science from McGill University, Krista is now an industry leader who writes and speaks regularly on such topics as business finance, scaling startups, and diversity in teams.
Krista, thanks for coming on the show today.
Thanks for having me. I'm excited.
You guys are a lender, obviously, but you're not a traditional bank, but you do provide investment capital. Can you kind of explain to me what P2Binvestor is and how you guys are different from traditional banking institutions?
Yeah, so there is a whole, there are a lot of companies that need good debt financing as they're growing, but they can't access it from the banks, largely because the banks have regulatory burdens that, that I think for good reason. And so there you have a lot of alternative lenders. It's a $100 billion industry of, sort of independent companies that are making loans to businesses that can't access traditional bank financing. In this huge market, though, there's very little technology, very little transparency, and it's incredibly fragmented. So P2Bi, we're a lender, but we're really bringing a lot of technology and a crowdfunding model into this, world of alternative finance. And the main companies, the types of companies we work with tend to be a lot of consumer product companies. So anyone who's like making a widget and selling it into, one of the big retailers, and then a lot of professional services companies. So company with regular payroll and like irregular payments. It's a cash flow loan.
So just to help with the float, more or less?
Correct. Exactly right.
Is your background in technology or is your background in finance? Or how did you find yourself as the CEO of a fintech company?
Excellent question. No, I didn't come from tech or finance. My background is not in technology or finance. I discovered this world of online lending somewhat by accident and just paid attention to it. And then, years later in 2011, my dad was telling me about factoring, which is the practice of selling invoices in exchange for cash. And as we talked about it, I sort of remembered this world of online lending and, kind of thought, what if you could put these two things together? And that was it. It was just it was very serendipitous.
You said factoring is where you buy companies' outstanding invoices. Is the P2Bi platform like a brokerage house for those invoices, or how does it work?
So we make a loan to a company where the amount of your loan is based on the total number of invoices you have, and could be other assets too, inventory, some machinery and equipment. So we look at your total assets and we say, okay, we're willing to lend you on any given day 80% of the value of your invoices.
What's the dollar range that you guys typically lend?
Typically 1 to 20 million in revenue. So I like to think we're targeting this segment of companies that are, you wouldn't really call them a small business. They're almost too big to be small and then too small to be big. And so they're, kind of caught in the middle, but they're usually growing quite quickly and they need to be able to access cash because they're usually having to make new orders before like the orders they've shipped have paid.
So if you're lending out a range of $1 to $20 million of loans, how does that work in terms of like the customer base? And explain that to me.
Sure. So we were really working with companies that are not profitable enough yet. Like you said earlier, we're helping them float. So they aren't profitable enough to just have, their own float. You might be doing $20 million of revenue, but in professional services, like a staffing company, they might only be running an 18% margin. So actually the profit that they're getting on that 20 million is not huge. So the defining characteristic is less revenue and more about profitability and growth. So they're not generating significant profits, but they're growing quite quickly. And so that is really where this float issue is, kind of exacerbated. Those are the companies that feel the most pain.
That's why banking institutions, traditional finance institutions, aren't willing to lend them money because, like you said, they're in that in-between space of too small to get startup loans, but not large enough to be attractive to banks.
Correct.
Tell me about your background. Where did you grow up and how did you get your start in this?
So I grew up in Montreal. I'm Canadian. I went to McGill. I have a degree in economics and political science. And then after school, I moved to London for love, followed a guy to London and, got a job in, again, somewhat by accident, actually, in digital marketing. And so it was actually a great time. This was 2005, 2006. So digital marketing, like social media, was just coming up and, becoming something that brands were looking at. So I spent about 6 years working in agencies on, just developing campaigns and strategies for people like Coca-Cola, Barclays, Johnson & Johnson. And really loved the work, really learned a ton, worked at kind of small agencies and big agencies, discovered I was really not cut out for big corporate life, did not do well with the politics of bigger organizations. But then as I sort of did that through my 20s and, as I turned 30, I just realized that I couldn't see myself doing that for like the rest of my life. And I started really feeling frustrated that even though I worked really hard, I had trouble getting promoted and moving up. There are a ton of women in advertising. There are very few women at the top. So it was just couldn't see the path. And I started talking to my dad. We had always talked about business and, sort of fell into this idea. And I just thought, kind of like, why not? If not now, then when? And I didn't have kids. I had my dogs and my partner. And so, we just moved to Denver and took the leap. I moved to Denver because my dad lived here. So that was how I ended up in Colorado.
So does your dad have a background in finance or in technology?
Also, no. my dad and I are both, I mean, you would think that, but I mean, look, my dad's right. He was, it's not fair to say he wasn't in tech. He did worked in big technology companies. But I would tell you my dad and I are both much more sales and marketing people than we are, finance or technology.
So you could spot the opportunity and kind of the gap in the market, and then you just put that structure in place to kind of build the company, right?
Correct. Yeah, that was how I raised $1 million on a PowerPoint.
So you raised $1 million off of just a PowerPoint?
Correct. Yeah, we had raised $200,000 in a really early seed, which let us build, the super beta version of the platform and put the legal infrastructure in place. Turns out legal is actually a huge thing you have to think about, especially in the world of crowdfunding. And then, we had spent this $200,000 and we really needed, to get up to $1 million to make the company, kind of go. And at that time, we didn't really have any traction. We were talking to a lot of investors, but we didn't have any momentum. Like in early stage fundraising, you really need to create momentum. So I went to this huge fintech conference out in San Francisco, and with our kind of last dollars out of the seed round, I have a friend of mine is a sort of creative director, and she came up with this idea for a slogan that would get us a bunch of attention. So I stood up on stage and had 7 minutes to demo our idea. Stood up on stage in front of about 1,500 kind of thinkers, finance people, and said, hello, my name is Krista Morgan, and I'd like to fund your brains out. And then it was just silence in the room. People started laughing quite uncomfortably. and then I just launched into my demo. But for the next 2 days of the conference, we got tons of attention, a lot of interest. And as we came back, we're able to get, based on all this interest we've seen in San Francisco, we're able to get our local angel group to just move forward and lead the round on our first $1 million.
After that first $1 million, what was the next phase of the company that you were able to launch into?
So we raised $1 million, and then I promptly spent $1 million and almost didn't get to revenue. So it turns out it's incredibly easy to spend money. We made every mistake, right? We got the money and said, okay, let's start, hiring some people, and let's get office space, and let's start spending money on marketing, and, let's, think about all these things that in the end were related to getting revenue, but it was we started building infrastructure before we even needed it. And so pretty quickly, we probably burned through half the money in 3 or 4 months. And then as we got into early 2014, started just being incredibly focused on how we would actually get our first customer. And so we were 2 weeks, give or take, from running out of money before our first customer signed. And then the snowball effect took over. And, we went from having 1 customer to, I think, 6 or 7 customers. And we were lending, I think, almost $10 million within about 3 months. So it's just this huge amount of growth after almost having not made it.
So that initial customer, how did you attract them, and what was your pitch to them?
It was not very sophisticated. At the early stage, it was, I told you, my dad and I both have backgrounds in sales and marketing, so we were just networking like crazy, just trying to find someone that would take a chance on us. It did help that about a month before we signed our first customer, we had a small hedge fund give us a firm commitment for $5 million for lending. So we knew we had the money to lend. And then that made a big difference. And it was just grind and hustle, no kind of secret sauce to get that first customer. Just talk to a ton of people until we found someone.
And then after that first customer, was it easy to pick up additional customers, or was it still kind of a grind until they took off?
No, 5 years later, it's still hard to find customers. Turns out that is, it's a very competitive market, and, we're charging, call it 15 to 17% for our money. So people are always going to try to see if they can find another way. And so it's still difficult today, although I would tell you our processes are much more sophisticated. We understand our funnel a lot better. And it's like any sale, it's a numbers game, and the critical thing for us is just to make sure we put enough in the top of the funnel so that we can predict, what we're going to originate.
So it's not always the 15%, right? You've recently introduced programs or entered partnerships that can graduate that to a lower rate, right?
Absolutely right. We have today, last year we launched a bank program that actually came from the struggle of, we were just trying to find businesses and lending to them. And, that is very expensive, right? Going direct in the market. The insight we had is that every one of our customers wants to be at a bank, right? They're all trying to graduate up. And so we thought, what if we could use our technology and help a bank make a loan sooner than they could on their own? And so we piloted this program with a community bank in San Francisco, and then have now launched it. And so, yes, we can make loans with our bank partners anywhere from kind of 9 to 11% usually.
It's got to be a lot more appealing to, companies needing fundage, but not wanting to tie up 15% interest into their loans.
It is. Although I would tell you, on the 15%, their challenge is, like, the only other way you're going to float without your profits is equity. And while equity feels cheap, I've sold a lot of equity in our company. Like, our investors are expecting IRRs of 35%. When you really think about the cost of that, 15% is not a lot. But I agree with you. It feels like a lot on the surface of it.
You're right. 15% is a lot cheaper than equity. You can never pay off the equity. That part of the company's gone, and what it could become is kind of out of your hands in terms of, the profitability. So that's a really interesting perspective on it. If you're a company who needs cash, needs money to float, it does make a lot more sense strategically to take advantage of a service like P2Bi rather than carving out equity of your company, because you've worked hard to build that, and why give it away?
I agree 100%. But look, it depends. What I've learned, it's funny, not being a finance person, I've learned a lot about money and finance over the last 7 years, you can imagine. And, money and the decisions you make around money are very personal to every investor. There are CEOs who they don't like the idea of debt, makes them really uncomfortable. They'd rather sell equity all day long and take the dilution to not have the risk of debt. And that it isn't usually about the numbers themselves. It's usually actually quite personal. And then we have a company today that actually is super profitable, and they just hate banks. They just find dealing with the banks and the reporting is a real hassle. So they've built the cost of our financing into their margin, and they're very happy with it because they see the cost of their time managing, cheaper money also, is not worth it to them. So everyone thinks about it differently. I think the key is to actually know what you're choosing and why, and have looked at your different options and make sure you pick the one that's right for you. I think too many entrepreneurs just assume equity is going to be the best option when it often isn't.
How did you build P2Bi? What was your vision for it?
Oh, that's a good question. I always had a big vision. And I mean, in 2014, so that was, especially in our fintech world, right, of online lending, 2014, 2015, these were booming years, right? Companies were getting crazy valuations. There was a new platform being announced, every day. So I just assumed we would be on this, track to, $1 billion of loans that, we would raise venture financing, we would grow like crazy. That was what I imagined for the company. And so, especially those, and we did $1 million of revenue in our first year of business. So it really felt like huge validation, this early, once we got going, things started moving really quickly. In that first 6 months after we got our first customer, I hired, pretty senior chief operating officer, and really said, we're a finance company. We got to make sure our back office is running. And so she came in to help my dad and I run that side of things. We brought in a good head of technology, just started hiring, some key people to really invest in the business and kind of set it up to scale.
So after that first $1 million and that bringing the COO on, did the second $1 million come just as easy, or were there additional struggles as you scaled up?
So the second $1 million did. So we raised about another $2 to $3 million. So because we were almost out of money, we got our first customer. We very quickly opened a convertible note, and a lot of our existing investors started putting more money into the company. So we brought in another $1 million or $2 million relatively quickly in sort of end of 2014, early 2015. And then I, went to market in March or April of 2015 and said, well, I'm going to go and raise venture financing. So I, went to San Francisco, went to New York, and I spent months just talking to venture firms, trying to see if we could get an A round done.
So what was your experience like, going out to venture capital firms and trying to raise more money?
I mean, it was exciting at first. And I was so confident, because, we had $1 million in revenue. We were in a really unique part of the market. We were everyone was raising. And so, two of our, let's call it, closest competitors in those early days, they both raised like $10 million Series A round. So I was really sure we would get funding, and I spent 6 months trying to make it happen. And finally one day realized that, it just wasn't going to. And I asked myself a lot, why, what went wrong? I don't think it helped us that we were in Colorado, and not on the coast. I don't think it helped that I didn't have a background in finance or technology. And, we were just different. Like, I was different. Not only did I not come from the industry, I didn't go to Harvard or Stanford. There was, nothing about me that looked like other fintech CEOs. And so I think when you put everything together, it was incredibly hard, for us to get financing. And so I found myself really at the end of 2015 trying to figure out how I was going to fund this business, right? Because we had set up an organization that was burning cash where you need to keep raising more money. I found myself with a lot of lost confidence from my investors who said, angel investors who said that why, they just expect you to be able to go out and raise. And, in that moment, you realize, you just feel like such a failure. And I didn't really understand why. Because when I looked at the numbers, I was like, my numbers are good. There's no reason we shouldn't be able to get financing. And so that led us to basically raising more angel money. So we ended up raising $10 million in private capital from investors, over 125 investors, to get us, enough capital to sort of continue proving out the business model.
$10 million in capital. Is this to operate the business, or is this to make loans?
No, to operate the business. We've raised now a total of $13.5 million, and it's all private high net worth money. We have not been able to get institutional equity funding to date.
I think I read somewhere that 50% of the P2BI is made up of women, including senior leadership too, right?
Yep.
Obviously, you have a passion as a female in tech and a female entrepreneur. You have a lot of passion around this. How do you build that into a company, and how do you make that attractive to women, to kind of show them what's possible rather than just traditional occupations?
I get asked that a lot. I'll be honest with you. I have not found it that difficult to build a diverse team, and I haven't found it that difficult because I just made it a priority. And I made sure it was something I thought about on day one. The problem you get in tech companies is, they hire their first 5 or 6 people and they're all dudes. And so then when you want to go and hire someone else, inevitably the people in your company are going to their networks, you're going to your network. And so as you grow, it gets harder and harder to build a diverse team because you've started with a very non-diverse team. I started with 50% women. I think the first employee we hired was a woman, the next was a man, the next was a woman. And so all of a sudden my network is filled with women. Our employees' networks have women in them. And now you're a diverse team and people want to come and be a part of it. So it actually gets a lot easier. I think the companies that have trouble with diversity are the ones that hire, 20 guys and then are like, oh, we should think about diversity. You'd have to hire, you'd have to hire your next 15 employees, all women, to get there. It's just not practical.
So by doing it from the ground up, you've eliminated all sorts of biases or just, lack of diverse resources, and it's always been a part.
Yeah, exactly. And you care, when I post a job, I think about where are we? How many women do we have? How many men? Should I be thinking one way or the other? How is this hire going to impact? And I see 10 resumes from men for every female, almost always. And I make sure to always interview both, right? I don't interview all women. I don't interview all men. I interview a diverse range of candidates, and then I pick the best one.
I attended a talk recently about diversity and inclusion, and kind of the heart of it was if you can't see yourself in a position like that, it's hard to go after that, right? And actually one of the things that drove it home for me was, if the company's not appealing, if you can't see yourself there, see yourself fitting in, you're not going to commit, you're not going to, you're not going to stay, you're not even going to go for it. The speaker said, imagine yourself as a man walking into a yoga class and there's just women there, and imagine how you would feel. And I thought, oh my God. I've done that, and I did it once, right? I didn't go back because I didn't feel at home there. I didn't feel like included, like that was the place for me. But being a female, I can relate to that. You're interested in technology. You interview for a company like this, but when you walk into the room, there's just guys in hoodies sitting around the table. How out of place would you feel, and how unwelcome would you feel? So I thought that was a really interesting point.
No, and that is exactly right. And look, I have to spend a lot of time externally, right? I go to fintech conferences. I'm out and about a lot. And when I go, like I'm going to a conference in Vegas next week, and it's going to be not all men, but it's going to feel like all men. And, I just find it exhausting, to just feel so out of place. And they're not, it's not like I'm not welcome there. It's not like they don't think highly of me. I get a lot of respect in the industry, but it's just, I'm like, oh, I'd rather be somewhere else where, to your point, I feel like I'm not standing out in a kind of awkward way. That's exactly right. I remember an investor one of our angel investors years ago, maybe we were, 18 people, and he walked into our office and he was like, Krista, he was like, gosh, he's like, you guys are like 80% women, eh? And I was like, no, we're 50%. And he's like, no, there's like women everywhere. And I'm like, this is what 50% looks like. Like, you are just so used to walking into a tech company where it's like all men. You think that's normal, right? You think 50% women just looks weird. So, yeah, it's just it's all this unconscious bias, right? And no one's trying to, I don't think anyone's doing anything unintentionally. I don't think VCs intentionally said, we're not investing in you because you're a woman. But I think they're looking for a mold, and I didn't fit that mold. And so they, they're just like, well, we're looking for a mold, and you're not that.
Yeah, exactly. If you don't fit the mental model of what the person has, is it confirmation bias? Or I think there's some psychological term, for not fitting the model and being unconsciously rejected because of that. So yeah, it's interesting. So what role has your dad played in the company? I know that he was a co-founder with you in P2Bi.
Yeah, so he's been critical. I actually never imagined starting a company as I was growing up. I certainly never imagined starting a company with my dad. I think my mom found it pretty shocking. My parents are not together anymore, so she finally questioned it. But my dad has been in business for a long time. I had a ton of respect for him. I felt like this would be a great opportunity to learn from him. And I'd been living in the UK. He'd been in Colorado for a long time, so I just thought it made sense to do this. And I would tell you that the two of us worked really well together, especially from like a sales point of view. We're both visionaries. We both, we're good at kind of telling the P2Bi story and talking to people about, why it was going to be successful. He was our first CEO actually. And then by the end of 2014, he decided that, I should be the CEO and he was going to be on the board. And that definitely helped because as the company grew, when you have two founders, forget the fact that we're father or daughter. When you have two founders, you're going to have different opinions. And I think it can get confusing for the staff, who's right, who do I listen to, kind of whose opinion matters. So we felt it was important to kind of segregate responsibilities. But he's been hugely influential. And I would say it's been hard. We like all founders, have, kind of ups and downs, and times where it's, sort of going really well, and times where it really feels like we're not on the same page. But being family has meant that, I don't want to like not spend Christmas with my dad. I don't want to, you kind of find a way to get through it, because this is not a relationship that, I want to throw away. It's definitely been a challenge, and I think also like a benefit, right? I think it's a kind of double-edged sword, like so many things in life.
You can quit your job, but you can't really quit your family.
Correct.
So you're stuck.
Correct. Yeah.
So when you took over the CEO, the reins as the CEO, how did that change the company in terms of like direction? Like, was there a new direction you wanted to pursue, or was it just kind of a change in leadership, but business as usual?
And actually I say this to a lot of the people that work for me. I'm a big believer that you get a promotion when you've already been doing the job. So really, as we had started to hire people and build a team, it was pretty clear, that my dad and I share a lot of qualities, but definitely call it people management. I have like a higher degree of empathy, and we're hiring, just quite, especially at the beginning, pretty young people. And so it just made sense that I, would handle really the day-to-day running of the company. And he's really always focused more on like big biz dev, fundraising, things that are more externally facing rather than internal.
So what is your dad's role in the company now? Is it just as an advisor, or still with the company, I assume?
Yeah, he is. Yeah. Can't get rid of him, just he's on the board. He's on the board, and still he and I work together on kind of big fundraising deals, business development. He's an amazing sales guy, and he's a huge advocate for the company. So, I sort of think of him as almost like a kind of founder emeritus. He just loves the company and really promotes it externally.
So in addition to running P2Bi, you're also involved in an organization called Women Who Startup, right? Mm-hmm. Tell me a little bit about your experience there.
So I moved to Colorado in, 2012. I started this company. I'd never been in a startup before. I'd never lived in Colorado before. Everything was new. And so the first thing I did was start going out to meetups and just trying to get to know people, and frankly, just figure out like what the hell was going on. And I found early on that, again, it was very male dominated. I'd go to meetups and there were really not that many women around. And so then I discovered, Women Who Start Up, and, Lizelle, the founder, had the same experience. And, so she had just started a meetup group where it was mainly women. And, to your point about the yoga class, I would like go in there and I was like, oh, my people, like I can just be here and, feel like it's just a safe space, to talk about, the struggles you're going through in the early days of starting up. And it's, in that time, like really lonely. It's just me and my dad. So it was an organization that meant a lot to me. And I agree with Lizelle's philosophy, which I think we've touched upon here a bit, which is like, you can't be what you can't see, and when you go to meetups, most of the interviews, most people that are there are male CEOs. So she wanted a place where it was all about female CEOs and female leaders. And that resonated with me. And I didn't realize how important having kind of female mentors in my life was until I became a female leader and just thought in some ways, being a female CEO is exactly like being a male CEO, right? You have the same struggles, but there are some things that are unique, and it's really helpful to have other women to talk to about it.
So that organization, Women Who Start Up, is that based in Colorado, or is that a national program?
Yep, no, it's based in Colorado. This year, it's turned into a nonprofit and a foundation. And, I've been working with Lizelle to try to promote the brand more, like in a more national way. But yeah, no, it's a very grassroots organization, right? In tech communities tend to be very male dominated. If you can come in and have a space where women can talk about being an entrepreneur, they just feel safer to ask questions because there's just so much you don't know. And you feel, I still feel this way sometimes. I have to ask a lot of stupid questions. And, sometimes you just don't want to. And I certainly didn't want to, with the guys on Wall Street or whatever, right? When I'm trying to show them I'm one of them. And so that's really the goal, is how do you create a space where women can really ask whatever they want to ask, because that is a more female characteristic. We like to understand a lot more before we take action.
So it just kind of gives you that space to feel welcome and included, and it was like a safe space where, nobody's going to look at you weird if you ask a question that probably 50 other people are wondering the same thing too.
Yeah, exactly. Yeah. What's a balance sheet pro forma? Why do I need one?
Right.
I didn't, that's not even a dumb question, but that's a good example of something, a lot of women are just, they don't want to ask that, and it's so. Anyway, I'm a huge supporter, and I'll tell you, I think as I came up through my 20s, I've given this talk before. As I was growing up, it was women are equal. We don't need feminists anymore. We're all the same. And it's only as I have grown up, have been in this position, that I've realized just how there is inequality and there are struggles for women. And I would now consider myself very much a feminist, more so than I would have 10 years ago.
Krista, I've really enjoyed having you on Colorado TechCast today. I've interviewed a few different female tech entrepreneurs, and the perspective that women bring to tech is different than men. Obviously you've touched on a couple of things, empathy, asking probing questions, wanting to understand things like that. So, and having 3 daughters of my own, it's encouraging to see that the space is open for women who want to get into not only business, but technology as well. And seeing organizations like SheTech and Women Who Startup out there to support that is really encouraging. It gives me a lot of hope for their continued development. If people want to find more information about both P2BI and Women Who Startup, do you have any resources for them?
Of course. So P2BI, we're P2BI.com. You can get in touch with us. And we're on Twitter and social. And it's easy if you get in touch with P2BI to get in touch with me. And then for Women Who Startup, also at Women Who Startup on Twitter, womenwhostartup.org. Lots of information there.
Thanks for listening to this episode of Colorado TechCast. Visit our website at coloradotechcast.com for episode show notes with links to all the great resources we've talked about in this episode. While you're there, click the subscribe button in iTunes so you'll never miss a new episode. I'm Trapper Little, and I'll talk to you again on the next episode of Colorado TechCast.